Hello, tax students in the finance program. So now we're going to do a demonstration problem where we fill out the tax return and some of the schedules that go along with it. So it's what we're going to do instead of starting with the tax return. We're going to deal with the information that has been presented to us by the client, and then just think about where that would go in the tax return. So let's think about the main sections of our tax return. The main sections, well, we just have identification and other information, step one. That's pretty straightforward. Step two is our total income. Okay, so this is all the income that we had for the tax year. And notice how these are all pluses, no minuses, so end up with a total income amount. But then we take our total income and we add up a bunch of deductions. So here's a minus sign here. So to arrive at our net income, we subtract certain amounts from our income, which we arrive at our net income. And our net income is used for various tax credits. Some tax credits require the use of our net income. Then we finally arrive at our taxable income, which has some more deductions. Primarily, what we focused on in this course was the loss carryovers from other years. So partnership loss from other years, non-capital loss of other years, net capital loss of other years. That was what we primarily focused on. And then we have our non-federal refundable, sorry, our federal non-refundable tax credits. Sorry, I was saying that backwards. Anyways, so these tax credits are calculated in this schedule here. We add all of them up. And then there's a side calculation for our medical expense tax credit. We don't need a separate schedule for this. It's calculated right on the form. But some of these other ones require the use of a schedule. For example, you'll see the worksheet used to calculate many of these. And we'll go through that in this next question. So we add all these up, multiply it by our 15% rate, and then we come up with an amount before donations and gifts. So the donations and gifts tax credit uses its own rates and way of calculating the tax credit. And so we would use Schedule 9 for that. Okay, so far so good. We have to calculate our taxes owing using our tax brackets. So sorry, not our taxes owing, but this will be our taxes calculated before we apply any tax credits, tax reductions, such as payments, taxes we already paid. So then we would, once we have calculated all those amounts, we put in our taxes owing before tax credits, federal tax on split income, which is not a part of this course, and then push that amount over to the right. Okay. Enter your total federal non-refundable tax credits. Okay, so we know what that is. That's step 5. We put that in here. So now what we're doing is we're adding up deductions here. So our federal dividend tax credit, which we figured out how to calculate already, we would put that in here. This is a tax credit that is also has its own way of calculating the dividend tax credit. It's also going to be on the T5 slip when you get your T5. But this dividend tax credit, it could have been like the donations and gifts tax credit, I guess, because it has its own way of calculating what the tax credit is besides multiplying by 15%. Okay, again, 15% is the lowest tax bracket percentage that's used. Sorry, got a little itch on the arm there. And then, but yeah, it's not calculated there. It's calculated here as a deduction. So we add up these deductions and we have a negative sign here. Okay, and then once we subtract these amounts, we get our basic federal tax. And then after the basic federal tax, we have a federal foreign tax credit, which we haven't gone over for the scope of the course. Doesn't include this, so we haven't gone over that. Okay, line 50 minus line 51, that's going to be our federal tax. Okay, is that all then? Are those the only deductions available to us? Nope, because then we also have the federal political contribution tax credit. So you see we have two more actual tax credits. So we have the federal dividend tax credit and the federal political contribution tax credit that we would put in here as well. We end up with our net federal tax. We haven't considered these other amounts down here. Okay. Finally, we calculate our refund or balance owing. These amounts are important. They make a lot of sense because we have tax deducted from our paychecks already. So that the tax deducted from our paychecks is going to go into this slot here, this 43,700 right there. Total income tax deducted. So items that can increase our taxes is CPP contributions payable on self-employment that we might calculate at the end of the year, or employment insurance premiums payable on self-employment if we made the election to pay employment insurance on self-employed earnings. Social benefit repayments that we might have, and obviously provincial or territorial tax, which we also have to calculate at the end of the tax year. And if you're using tax software, it automatically calculates as you fill out your tax return. And if you're using a paper method, most provinces have their own rates but mirror the federal tax return in many ways. In some ways, they're a little bit different as well. So they might have tax credits that the federal government doesn't have. In Saskatchewan, they have a child tax credit still, so that's an example of one of the tax credits that a province might have, but not the federal government. Okay, and then so we add these up. Then we can subtract these amounts: total income tax deducted, employment insurance overpayment, climate action incentive, sorry, I skipped this, CPP overpayment. So these overpayments here can quite easily happen if you have more than one job and you pay more CPP than the maximum allowed, because you're obviously the employers aren't talking to each other, making sure that they stop deducting CPP off your paycheck once you reach a certain amount. And a refundable medical expense supplement, which is calculated on the worksheet. This is not quite like a tax credit, but it's a further way to reduce your taxes owing if you have low income but high medical expenses. Okay, we'll just go further down here, skip some of these, and tax paid by installment. So that's obviously that's just like this total income tax deducted from your paychecks, and you might have also made tax installments during the year too, just to make sure that you didn't have taxes owing at the end of the year. And then you can also deduct your provincial or territorial tax credits. So you're going to put your provincial or territorial tax here. You put your provincial or territorial tax credits here to reduce your taxes. Okay, and then these are your total credits, and then a further deduction, and that's finally your refund or balance owing.